This podcast is brought to you with the kind support of Harbour View Equity Partners. Harbour View Equity Partners is a global investment firm focused on opportunities in the entertainment and media space. Founded by Charisse Clark-Soares, Harbour View is a long-term investor in content with an industrial platform built to protect, optimize, and enhance the legacy of premium IP. With a vision of becoming a true stakeholder in the global value of content, Harbour View believes creators deserve a seat at the table creatively and economically, owning their narrative and maximizing value for all. In celebration of our partnership with Harbour View Equity Partners, we have chosen a separate piece of music for each podcast in Series 1. We hope you enjoy it.
Our next guest is a portfolio manager in emerging markets, a former consumer analyst, and a principal dancer at a Chinese dance troupe. Find out how the discipline, rigor, and creativity that she brings to that pursuit shapes her work in finance. I'm Aoife Devitt, and welcome to the 50 Faces podcast, a podcast committed to revealing the richness and diversity of the world of investment by focusing on its people and their stories. I'm joined today by Vivian Lin Thurston, who is a partner and portfolio manager at William Blair Investment Management, where she is based in Chicago. She previously covered global consumer stocks in a research role, both at William Blair and a series of other financial services firms. She's chairman of the board of the Chinese Finance Association of America and a principal dancer and director at the Xilin Dance Company. Welcome, Vivian. Thanks for joining me today.
Thank you, Ethan. Thank you for having me today.
Well, let's start with your background and career trajectory. So where did you grow up? What did you study? And how did you come ultimately to enter the world of investing?
I was born and raised in a small coastal town in the southeast of China, the province called Fujian province, in the 70s and 80s. So at that time, China was very different with its economy at the very early phase of the growth and opening up. After finishing high school at age 16, I left my hometown to attend Peking University in Beijing and major in sociology. And when I graduated from Peking University in 1994, it was a very vibrant period of China economic growth at that time. So I decided to work for 2 years in China in two different companies. One is Vanke, which is one of the largest property development companies in China, and the other is a government-owned investment trust company called China Agribusiness Trust and Investment Corp. And then I realized that I'm not fit for a Chinese business environment, given I think I'm more direct, I'm more care about the professional side of development, less about some of the relationship management side. And then I decided to come to the United States to pursue graduate studies. So I attended the PhD program at Department of Sociology at University of Illinois at Urbana-Champaign on a full fellowship in mid-90s. And then finished my Master's Arts in Sociology and then Master of Science in Finance in late 90s. In the summer of 1998, before I finished my master's degree in finance, I got a summer internship position at Princeton Partners, and later on become UBS Global Asset Management. So I worked on a risk premium project at the Emerging Markets Equity School back then. It was very fun and great learning. So then they hired me as a full-time employee after I finished my education, one more semester with the UI membership campaign. So that's how I started my investing career, all in the fundamental investing side, from the end of 1998 to now. So that's my long journey.
And working inside a Chinese company as you did, how did that help you analyze those companies later as an analyst?
Yeah, I think that 2-year working experience in China, actually later on I realized very beneficial because I got an opportunity to work at two very distinctly different companies. Vanke at that time was one of the first privately held companies in China and was also an example for China stock market listing. So their ticker was 0002. It tells you that their probably second one got listed. So the culture in that environment and company very, very driven by market economy, very capitalistic kind of a culture. So to me, a young graduate from college, that was an enormous learning, and I loved it. I was doing marketing and sales, and later also do some marketing for our entertainment program. So that was very fun. But the second company I worked for was more SOE kind, but they are in the investment trust kind of field. So I get to learn more about investment and financial related functions. And that probably set the basis for my later investment career and interest. On the other hand, I've also realized there are a lot of barriers and then structural impediments for those SOE companies. So that was also the trigger, catalyst. Eventually, I decided to leave the company and come to the United States to study. So those experiences really helped me now put everything together. Now, as an investor looking into Chinese equities, it helped me kind of to analyze those companies in a more, I would say, comprehensive and well-rounded perspectives and differentiate them.
And let's talk a little bit about your dancing, because we are going to go into the portfolio management function in a lot more detail later. But I'm fascinated by your long commitment to dancing throughout your life, and also the fact that you're now a principal and running some of these performances. Can you tell us about that and what you learned from that and what you bring from it? Mm-hmm.
Great. Thank you for that question. Yeah, I started learning Chinese traditional ethnic dance and ballet since a very young age. I think I was probably 11 at that time. So I practiced and performed dances constantly from a very young age until I graduated from Peking University. I was a member of that university, a student dance group. So I have a long-term passion for dance. And then so I was very happy that when I came to the United States and also started working in Chicago, I found this non-for-profit performing arts school based in Naperville. It's called Xilin Dance Company. So I started to dance with them in 2001, and I've been with them since then. So it's been tremendously amazing, rewarding, and a fun experience. So I think dance really offers me so many different things in life. First and foremost is the beautiful artistic creative side of it. And I love that. And the second piece of it is the fitness. So this is the only hobby I have kept since childhood. I used to have more hobbies, and I benefit tremendously from the physical side of the training, the fitness. And that also helped me to be able to handle a lot of physical demand as an investor. When I travel all over the world, I never had a jet lag, and I can immediately adjust with a lot of energy to the local time. So I do think I owe that benefit from my long-term dancing training and program. The other very important benefit, I think, is my mental happiness and the balance. Dancing really provides that aspect. I would say that's my right brain, right? Because we use a lot of left brain, so I come into investing. But dance and all art in general provide that balance. And that definitely helped me to become I would say, more level-headed and well-rounded investor. And that benefit, I actually really start to recognize more and more as I'm doing this profession longer. And then the other important factor is a super helpful distressing kind of a mechanism. Many times, our profession have to deal with a lot of stress with markets and all that. But whenever I go to my dance class or perform, I can forget those stress. This is probably one of the few methods that can be very effective to de-stress. And then lastly, I want to mention that I think I also benefit a lot as an investor from my dance training and experience. So there are several aspects. I think first, being a good dancer over time, you have to really follow a very disciplined, rigorous kind of approach and training. So that discipline really helped me now apply to my investment approach. Being disciplined is very important. And the second piece is about teamwork. Because I joined a lot of group dance. And then the group dance, you need a lot of teamwork, mutual respect, and also coordination with each other. So that helped tremendously as well. Now for being a PM, working with different analysts and also my co-PMs on different strategies. And the third piece, I think, is the resilience and perseverance. Being trained as a dancer, especially we perform on a constant basis, you really need that resilience, both mentally and physically. So that actually also helped dealing with a pretty stressful, volatile stock markets from time to time. I think that resilience, mentality, and perseverance really helped me. And lastly, I want to mention is that the constant pursuit for excellence and also basically put yourself for a higher standard all the time and compete with a better self. That I think also resonated with me very well from the investment perspective. So those are the benefits I really feel it helped me and benefited tremendously from my dance background.
That's also very encouraging because I think for other art students to go into finance, they may not think their skill set necessarily lends itself but I think we now know that it can. So I think that's a really encouraging thing. And you were speaking of stress, and I wanted to ask you about the transition from an analyst role to a PM role. Can you talk to us about why you decided to take that on and how your role changed when you became PM?
So first of all, I think the fundamental skills for being an analyst or being a portfolio manager are very similar, and that's a fundamental investing. And I think that's why transitioning from an analyst role to a PM role, the key pillar is to have the fundamental investing skills, and that's very transferable. The difference is, as a consumer analyst, I'm more focused on us as a specialist in the consumer sector. But as a PM, I have to be more a generalist with broader focus in terms of knowledge across different geographies and sectors. And the other important part for me, because I was doing consumer globally before, and consumption is a very big part of the economy globally, and that research also needs both top-down and bottom-up consideration. That actually helped me tremendously to transition into a PM role, given that underlying content consumption was already a big part of the global economy. So now you expand broader to other parts of the economy. And secondly, as a PM, we do need to have both bottom-up and top-down views. So as a consumer analyst, I also find that training quite handy. And the third piece, I think consumer itself is a very diverse sector, right? So not just about on the one side staples, on the other side, you have a very discretionary, some even cyclical kind of industry, such as hotel, gaming, luxury, and all that. So the broader spectrum of diversity within consumer also prepared me now to face all industries as a PM. And lastly, I do feel as a consumer analyst, for whatever reason, maybe because the underlying content and the industry is more related to consumer, it helped me to become more well-rounded, I would say, investor, and also probably more communicative, if you will. So that also helped me to transition into a PM role, to communicate with all different people with that well-rounded perspectives, and also with the time management, given that portfolio manager is more multitasking kind of jobs. Generalists have to do all different type of functions. So that's what I would say about this transition. Yeah.
It's really interesting. Yes, we all are not necessarily industrial firms or healthcare providers, but we definitely are all consumers. So I do think it's one of those things that unites us. And obviously the consumer features very much in the investment thesis, whether it be China or all emerging markets. And you've spent time as a consumer analyst. What are some of the trends that you think maybe are manifest when it comes to consumer behavior in China and emerging markets today, and maybe some trends that are happening that we're not as aware of?
Yes. So I think they're almost like tale of two cities for EM consumption trend, if you will. And first, I think we continue to see this more structured trend that we have known about EM consumer for a long period of time. Basically, it's rising middle class, increased per capita consumption, transition from informal to formal consumption, from non-brand to branded consumption. So this is very much ongoing for a long period of time. And this is still true these days among the EM consumers. But in the same time, we also see EM consumers take on the similar trends that we're seeing in the DM world, especially in some cases they even leapfrog, right? So on the one hand, we saw developed markets consumers really going through this premiumization trends, health wellness trend, uptrade trend, all that. And we also see the same trend happening among the EM consumers. And then lately, I think EM world also starts to focus more about ESG from the consumption perspective, whether it's food safety, social responsibility, or environmental impact. We see the same trends among the EM consumptions and consumers. And then the other aspect, I think EM consumer even leapfrog the DM consumers in some ways, especially in those more technological-driven consumption, whether mobile phone usage, e-commerce, internet, social media, and now EV, right? So I feel the latter two trends I just mentioned actually also become very pronounced among the EM consumers. And that actually continue to drive a lot of interesting, attractive investment opportunities in the EM consumer landscape.
And just talking about maybe some of the other trends that we're hearing, whether it be awareness of sustainability, technology, embracing, what really excites you, what you're looking at when you look across the landscape?
So first of all, I continue to see the energy transition as a very important and exciting trend happening more so these days, probably in the EM countries than the DM world. And China specifically is the leader, in my view, in the global energy transition trend. So for example, China is the largest EV producer and the consumption country in the world. You also have a few top EV battery producers in the world. And then on the solar front, they are also leading the world's supply and demand for the solar panel side. So I feel the energy transition trend actually looks more even forward in China than some of DM countries. And that's mostly because some of DM countries have legacy industries impact, such as the traditional auto. And there are also some political leaning debate about how we should think about environment, right? But in general, I do think the energy transition is a very big and important theme going forward for the global level. But I do think EM and China, to some extent, could even leading this trend going forward.
And let's talk about investor perception of emerging markets in China in particular. Clearly, that's really moved on, I say accelerated perhaps the focus over the last few years. What do you think investors get wrong in terms of their perception of emerging market risks? And do you think maybe some of those risks are themselves changing?
I think both, actually. So on the one hand, I do think global investors tend to have their home biases when coming into EM country or EM investing. And sometimes the view can be a little bit simplistic, also with certain maybe wishful thinking. And that I feel is probably understandable, given that a lot of emerging countries are very different than the US in terms of the society, the culture, the system, and the people. That's why I think investing into EM successfully will have to have those insights and then learning on the ground and the constant visiting those countries. So I feel China specifically requires that type of understanding so that we can filter through the biases as much as we can. On the other hand, I think you pointed out also correctly is the risks in EM countries also evolving fast and also changing constantly, whether it's a macro risk, political risk, geopolitical risk, regulatory risks, those all kind of very broad. Compared to DM investing, you probably don't have to deal with a lot of those risks. Political risk, geopolitical risk, or regulatory risk probably less pronounced in DM countries. So therefore, I do think the truly understand risks and then understand the risk reward more important to successfully invest in EM equities.
And then talk about putting all emerging markets in one group. That seems to cause more confusion as well. The fact that there are many different diverse countries with different trajectories, maybe commodity importers, exporters, all under one category. What is the impact of that?
You're right. I think this is actually a probably bigger discussion for MSCI EM index going forward, and how does MSCI should think about the global emerging markets index and the composition of it. So as you correctly point out that there are very different countries within EM, and then the drivers and then trends and the themes of that also very different. So the two major camps, one is more domestic growth stories driven by the rising middle class. So China will be in this camp, India, Southeast Asia, and then Latin America, and then now to some extent maybe Middle East. But there's another important investment theme within EM investing is technology. So several countries, such as Taiwan and Korea, they are classified as the EM countries, but they are actually domestically, they're no longer emerging. Their domestic economy and the consumers are pretty much developed markets by different measures, but they are still in the developed emerging markets indexes because they are supplying. They are like in the EM kind of a territory and supplying to the global industries demand, precisely in industries such as semiconductor. So that investment theme is very different than the first thing I was mentioning, and drivers are completely different. Therefore, I think when coming into EM investing, investors have to truly understand and differentiate those different types of investment themes and different countries' evolution.
And moving on now to some of the other nonprofits that you work with, including the Chinese Finance Association. Can you speak about some of them?
Absolutely. So I'm the chairman of the board for Chinese Finance Association of America. It's a nonprofit organization with a global member base. And I was actually the founder of this organization back in March 2009, right after the GFC. So this organization has been around 13 plus years, and we have members across different countries and different cities within the US, Chicago, New York, Los Angeles, and also in Hong Kong, Beijing, and Shanghai, and also London. So it was a very good cause and mission kind of a organization with an aim to promote the professional, cultural, and education exchange between the US and Chinese finance professionals and to facilitate the understanding of the Chinese capital markets and vice versa. So this being a very important effort of mine in the past 13 plus years. And I really feel it's a very rewarding experience. Not only the impact our organization has been very material, that we touch upon many people, many members now they went on to their professions, their career, even personal life, benefiting from this organization. In the same time, this is also a very rewarding experience to myself. I feel I've learned a lot, grew a lot, both on the personal level and professional level. Whether it gives me the opportunity to give back to the society, share my experience, knowledge, and resources, also help me to become better at leadership and how to organize events and how to operate a nonprofit organization. And then on the other hand, I think I also get to work with a lot of very smart, driven, younger professionals. And now they are actually leading the operations of this nonprofit organization completely on the volunteer basis. So it's a very rewarding experience, and I will continue to work with them. And this is kind of my lifelong, I would say, devotion, and I will continue committed to it.
And speaking of giving back, I understand you're also supporting students studying sociology at University of Illinois. Is that something that you feel strongly about?
Yes. So I'm also on the University of Illinois Liberal Arts and Science College Alumni Council. And last year, I actually made a donation to establish a research endowment fund to award Department of Sociology graduate students for their research projects. So this actually it's a dream coming true, because I came to this country in 1996, attend University of Illinois with a sociology program, and then I got a full fellowship. So without that fellowship, I would not have my life and my career here. So that's why I'm very glad that I was able to give back. After exactly my 25th year, I think I attended the university. And then it's a tremendous, I would say, humbling experience as well. So I'm happy that they already awarded 2 students projects. And then recently, one of the students even sent me a very nice video mentioning he's working on this cross-border, the Mexican immigrants before they came to the United States, or even illegal immigrants, how that social behaviors and the demographics impact the trend. So I found it goes a long way. I hope the effort that I share back with the university.
Oh, that's very powerful, the work that he's doing. And then just tied to that, your work with Asian American finance professionals, what has that told you about the level of diversity in the industry, the level of inclusion, and perhaps what still needs to be improved?
I would say our investment management industry as a whole tend to score at the lower end of diversity compared to many other industries. I think there are statistics showing that. I remember I saw some presentation before. Investment management and IT are the 2 industry score on the bottom in terms of the gender diversity. And I think it's not too surprising. So I do think there are still a lot of work to do for our industry to increase that diversity. And my belief about diversity is that eventually it's a cognitive diversity, but that cognitive diversity tend to come from different people's backgrounds, their training, their learning journeys and all that, therefore tied with the regular diversity. So I do think if we can continue to help younger professionals who enter this industry with a diverse background to learn, to get proper training, to advance their career, and eventually to get promoted to the right position so that they can fully utilize their skills and not being in any disadvantaged position because of their background. I think that will be a very important effort of the industry as a whole.
And have you found that some of the affinity groups that you work with are particularly helpful in terms of creating a better network, maybe providing mentors, etc.?
Yes. So, for example, at Chinese Finance Association of America, we constantly hosting career development seminar, and we're even hosting some specifically specialized in diversity. And one seminar I remember a few years ago we did was 3 very strong panelists from different industries, female professionals. I'm one of them on the investment side. We have another one from managing consultant, and there another one from law. And it was a very well received event, and we attract a lot of male members to come, and the feedback was very, very positive. So that just made me think that those kind of sharing of knowledge experience about how female professionals went through their career from the beginning to the more established position, what are the hurdles they have to cross and how do they deal with that? What kind of advice and support, sponsorship they get along the way? And so those are super helpful, I feel. And I myself actually have been mentored to a lot of young professionals, both through the organization and also at William Blair. We do have a formal mentor program. So I've been on that program as a mentor for several years, and then primarily team up with young female professionals and colleagues across different geographies to help them advance and develop. I also informally work with a lot of our female analysts, more junior level, and to help them to gain skills, and learn about investing and understanding how to communicate and all that. And I really put a lot of effort, and I think that's very, very important. It means a lot to myself.
Well, that's a huge contribution by you. And I know, of course, William Blair as a firm feels very strongly about the diversity point. I just want to come back to some personal reflections, because you are the personification, I think, of resilience and optimism, particularly in a field like emerging markets, which hasn't exactly been a one-way trajectory, especially not for the last decade. What would you say were some of the highs and lows of your career so far?
I'll probably start with the low points first. I'll think about high points as I go. I would say low point was, my career wasn't always linear. One of the low points that when I left UBS Global Asset Management in the end of 2011, at that time, active management of US equity asset class was under tremendous structural challenges. So at that time, my career prospect for continue to be a fundamental investor didn't look that great. Especially I was expecting my second child. Therefore, I didn't have a lot of flexibility in terms of location of the new position. So it was quite a challenging time. And I even took a small detour and ended up working at a fund of funds company, researching sourcing hedge fund managers. It was very brief because I didn't like it at all. So that was a period that I did a lot of soul searching about my own fundamental investing career. And then it was not without doubt at that time whether I would be able to continue to do what I love to do. But the good news is that resilience coming through. I didn't give up. So that eventually I got back to the industry. At the time, I was hired as the head of international consumer sector research at Calamos Investments based in Naperville. So that was very good. But the truth is that in the buy side or investment management industry, especially in Chicago, opportunities can be pretty difficult sometimes because it's not a very labor-intensive profession. But if you don't give up, if you keep trying, and especially if you have the passion for it, I think you can always get to opportunities. The luck factor is also important, but I always believe that luck doesn't come around if you don't have that readiness for it. So that's my low points. High points, I normally don't think about many high points. Not yet, especially I'm still in the middle of my career. But if any, there's one little bit high point was I received a Brandon Wood Top Gun Investment Minds Award in 2017. And most people probably never heard of this award, but apparently they're pretty highly regarded, based in Canada, but focused on US and Canada together. I won the award for the US consumer category. And the significance of it wasn't about the award. The award was voted by all the sell side, and they have 600 plus sell side analysts on their network, and they voted who on the buy side as a top mind. And so that came as a surprise, given that I was already at the time transitioned to a PM role. And plus I was more focused on the international consumer for a long period of time, not just US consumer. To get the US consumer top mind award, especially with 2 or 3 my fellow peer buy side analysts who I've known for 20 years almost, it felt very big honor, I would say, but humbling too. So if any, that's one small high point. Yeah.
That's impressive. And you talk about being a mentor a lot, and also the organization that you are now chairing and what you do with other women in the industry to encourage them. Did you have any mentor or sponsor of your own throughout your career so far?
Yeah, I would say I never had specific mentors or sponsors throughout my career, but I learned and benefit tremendously from several brilliant investment professionals, mostly my colleagues throughout the years. So I basically gathered benefit from a lot of people. And one of them was my former colleagues at UBS Global Asset Management. Her name is Christy Peterson. We worked together at that time at the US consumer space. She was more focused on discretionary side. I was doing more staple side. I was very fortunate as she actually really helped me to understand U.S. consumer culture, behavior, and all that, because that was very early on of my U.S. consumer coverage. And I was still learning about the country, the culture, and then the consumer as a whole. We even did a visit to elementary school as she kind of organized through her friends, and just to understand how the younger kids think about different brands and all that. It was a tremendous experience, I would say. So I'm very grateful for colleagues and friends like her throughout my career to help me, support me, and also mentor me. So that's why I want to share the same thing now with the younger professionals to kind of help them as much as I can.
I can imagine some of the Chinese dance instructors you had over the years were probably quite impressive people as well, from what I've seen of the discipline of that. So I'm sure there have been some real role models. When you think about those role models and others, was there any word of wisdom or any Chinese motto or proverb that you live by?
Okay, I did think about this. First of all, I always believe in passion. Be passionate. Always be passionate about what you do in life and in profession, and don't give up. And then also keep level head. And that always goes a long way. No drama. I have a no drama rule, both on the personal life and professional life perspective. And that actually helped tremendously, because then a lot of times it's all about decision making, whether personal life or professional life, like investing, that's what I'm doing. So with a level head, no drama kind of mentality helped tremendously to filter through the emotions side of the aspect, but make more sound decisions. And that over time will add up, and then will help you to get to the better spot that you would like to be.
It's a really interesting combination, passion, but with no drama. Because I think sometimes the two are kind of tied up. And I do think, because I think you and I are probably of a similar vintage, at least in terms of a number of years in the industry, I do think the more senior you get, the easier it is to strip out the drama. Because I don't know, I find that there's a sort of a perspective that comes maybe over the years. So it's really interesting. If you were to give advice to your younger self now, do you think it will be that? Or do you think you'd have something else to say to that young sociology student at University of Illinois?
I probably don't have a lot to say to myself at that age, because I always have a rule, also don't leave any regret. So even when I was younger, maybe I was less experienced, less knowledgeable, but I was still always followed by the same model as I kind of mentioned. So just don't try your best, give your 100% effort, to put your heart in there. So I wouldn't say I have a lot to say to myself. I grew up in a very innocent age of China and later on. So that innocence also have come through with me now throughout my career. So if anything, I probably want to give myself, maybe I should venture out a little bit and live a little bit more when I was younger, but no problem. I think I continue to enjoy now even better as I'm aging and become a more experienced investor. So.
Well, thank you so much, Vivian. I've always been amazed at the breadth of your portfolio coverage, should we say, whether it be as a portfolio manager, also the consumer sector is vast. And you seem to be able to distill it into very easy to understand, I'd say, nuggets that we can take away. And I think you've done that here. And I think you beautifully infused the passion you have for dance and what it taught you into what's made you a better investor. So thank you so much for coming here and tying those two disciplines together so lyrically for us.
Thank you, Ethan.
Thank you for listening to the 50 Faces podcast. If you liked what you heard and would like to tune in to hear more inspiring investors and their personal journeys, please subscribe on Apple Podcasts or wherever you get your podcasts. This podcast is for informational purposes only and should not be construed as investment advice, and all views are personal and should not be attributed to the organizations and affiliations of the host or any guest.